Good afternoon, friends. Wish you all happy Sankranti, and I extend my gratitude to Taxsutra for giving this opportunity to discuss the budget wish list from my end. And this budget work on Nirmala Sitharaman could be quite less because the Honorable Supreme Court helped her immensely in terms of its decision on Apex Laboratory case, decision in Checkmate's case, be it in the context of the freebies given by pharma companies to doctors, be it in the context of the employees' contribution to the provident fund. The decisions of Supreme Court have virtually made the provisions of Finance Act of 2022 retrospective. That apart, we always have a wish list for each budget, and in budget 2023, I would like expect the finance minister to consider simplifying the scheme of ATC. There are far too many avenues there. In my view, it should be made quite simpler, and there should not be more than about 5 to 6 avenues of investment. And for the rest of the items, it may be considered to bring in a sunset clause. And enough and more has been spoken on crypto. I don't recommend any reduction of tax rate as such, but I would at least expect it to be treated like any other speculative transaction. If you are into speculation business, the loss of speculation could be offset against speculation gain. So, likewise, if there is a crypto gain, it should be allowed to be set off against the crypto loss. And one more recommendation I would have is that by allowing the crypto loss to be offset against crypto gain, you would encourage people to report even VDL losses. That would help establish trial of the transactions. Otherwise, a VDL loss transaction may not even be reported. It's important for the economy to keep track of even all the videos, irrespective of whether the transfers have yielded gain or suffered losses. One more suggestion which one could consider is to set up recognized video exchanges on the same line as recognized stock exchange, and encourage people to have their transactions on videos through recognized video exchanges in India, whereby you could possibly offer them a concessional rate of tax. You can introduce some sort of a security transaction tax in respect there, but then reduce the rate of tax. You would establish trial in respect of all the transactions. You would have enough of monitoring mechanism to have control over the exchanges. Plus, you would encourage people to come into mainstream and so far as they're dealing with videos are concerned. Then, when it comes to the partnership form, there is one, very serious decision from the Supreme Court in Mansukh Dying's case in the context of erstwhile regime of Section 45(4), where the Supreme Court said a mere revaluation of an asset and crediting the revaluation result to partners' accounts amounted to, in effect, transfer of a capital asset, and hence old 45(4) attracted. Of course, since 1/4/2021, new 45(4) has come in. However, in case of those transactions which are deemed to be transfers applying Supreme Court decision prior to 1/4/2021 and subsequent application of 45(4) after 1/4/2021 could result in double tax, for which reason it is necessary for them to also provide that any revaluation which resulted in a tax event because of Mansukh's decision, that revaluation also should be forming part of your capital balance insofar as formula under 45(4) is concerned. This would avoid levy of taxes twice over. When it comes to the corporate reorganization and the tax neutrality associated with the same, you have section 4713B of the Income Tax Act, which will provide for conversion of a company into LLP. But then it has, obnoxious threshold of turnover and the asset base, which according to me should not exist in the statute book. So my recommendation is to have them removed. Don't please have them at all. And when it comes to the power of tribunal to grant to stay, now we know tribunal is mandated to ask for minimum 20% pre-deposit. There has to be an exception, or at least a list of exceptions, where we have situations of completely covered cases but the department not like following it. Take engineering analysis, completely covered by Supreme Court decision, but the orders are being passed by the department deeming them to be royalty on the premise that a review petition had been filed. But when it comes to the question of stay before the tribunal, it is insisted that 20% will have to be paid. So therefore the board should be magnanimous enough to come out with the list of exceptions which could be considered by the tribunal. When it comes to manufacturing, you have 115 BAB which provides for the concessional tax rate of 15%, and it has some sort of a window before which the manufacturing will have to begin. In my view, solar cell making is one area where India has to really advance. It would require a lot of investment, and it would take some time before the India would be able to make solar cells, which presently being imported from China. So in this context, it's important that this window will have to be extended insofar as solar cell making is concerned. When it comes to the charitable institution and association, the exemption which comes under section 11 and 1023C, we have one decision of Supreme Court in New Noble Education's case, where the Supreme Court went on to hold that 1023C clause 6 benefit would be available to an educational institution only and if only it has only educational objects. It cannot even have other charitable but not educational objects. Supreme Court went on to explain even incidental activity covered by seventh proviso as relating to only education. But then there are a lot of institutions which would have certain other charitable objects which are closely resembling education, which would support education. Mere fact that you have those objects also should not disentitle you from the benefit of 1023.6. It wouldn't serve any purpose because any such condition would mean they will move from 1023.6 to section 11 and stay with other objects than education without having to lose the exemption. Now, idea is to bring parity between 1023.6 and section 11. And when it comes to 1023.6, to insist 1023C clause 6 to insist that you have to exist only for education and for no other object could possibly be some sort of a needless insistence of a formality. So therefore, they have to step into undo the decision of New Noble insofar as its interpretation of solely is concerned. And you have one category of charitable association called general public utility. In short, it's called GPU. You may have read the latest decision of Supreme Court in Ahmedabad Urban. By Finance Act of 2022, an amendment has been carried out where if you are a GPU being hit by section 11 exemption being denied thanks to application of section 215 proviso, then you are allowed deduction towards any application which you have made towards the objective of a charity. Of course, there are some restrictions like corpus donation, contribution to another charitable trust, etc. would not be allowed. For example, if your income is 100, if out of 100 you expend 70 towards your objective for which you have been set up, they would give you a deduction of 70, although you are hit by section 215 proviso. But there is one catch. For earning this net profit of 100, From your gross receipt of 500, you would have incurred expenditure of 400. Explanation section 1311. Section 1311 says that while determining this income for the purpose of 1310 benefit, where I would allow you whatever you applied towards charity, I will not allow any expenditure in computing the said income. Which will mean what? From your gross receipt, whatever 400 rupees you have incurred would not be allowed. Whereas they go to allow 70 rupees which you applied towards charity. This, according to me, is completely unacceptable because there is a difference between charge and application. Whatever I have incurred, that 400 rupees to earn 100 rupees, will have to be allowed without any limitation, except that they could track it by insisting that I'll have to have compliance with 48.3, 48.1A, etc. All that let them do. They cannot deny the expenditure. While they would allow the application, it is obnoxious that they would not allow the expenditure. So an amendment has to be made in this regard, and according to me, section 1311 will have to be removed. When it comes to section 147, new regime of reassessment introduced by Finance Act of 2021, you would know that under the new scheme, first he has to issue a notice under 148 capital A within brackets B. Then he has to pass an order under clause D of 148A with the approval of the specified authority. However, this requirement of going through 148A is dispensed with such cases, understandable. However, this is also dispensed with one situation of information being made available under section 135A. See, 135A consolidates collection and verification of information relating to an assessee through a faithless verification scheme. Under this scheme, the information is verified and passed on to a jurisdictional assessing officer for the action for reassessment if needed. But then there is no reason why the process of 148A should be dispensed with insofar as this category is concerned. The Finance Act of 2022 amended the proviso to 148A to say that if the information is made available under section 135A, then the assessing officer may proceed to do the reassessment without following the procedure of 148A, which according to me is completely unacceptable. It actually does not make any sense whatsoever to exclude the application of 148A. That apart, I have two important suggestions. So when I will give my first suggestion, I'm sure many of the taxpayers may not like it. I would recommend the union government to seriously consider introduction of inheritance tax with a decent threshold to spare the middle class. This would avoid people building asset base not only for them, not only for their children, but also for their grandchildren, great grandchildren, and so on and so forth. While there is no difficulty in them holding on to wealth as long as they live and maybe pass on to one generation, but to keep on amassing wealth, which would pass on generation after generation, where subsequent generations would not actually be contributing but only be participating, may not augur really well. Therefore, they should bring in inheritance tax with a very decent threshold, whereby basic minimum property can be left behind, something which one may have to consider. Secondly, it's high time for Union of India to introduce social security contribution, which need not be by way of extra taxes. Instead, a small portion of taxes paid by HNIs, so 5% of tax paid over and above 1 crore of tax by HNI, may be assured to be returned by way of annuity. This would encourage many taxpayers to move towards beyond 1 crore tax bracket. And later on, seeing how it would be a success, they could consider introducing it to the lower levels, because we don't see the taxpayers' money being spent properly. At times when we would become unable to earn income, we would expect the society to provide us support. So, therefore, some sort of a social security measure, insofar as it would help the honest taxpayers, would help. And it will encourage many people to come into the tax stream. Lastly, insofar as administrative measures are concerned, we have one of the most robust self faceless assessment schemes on earth. But then it is suffering because of its faulty implementation. Reckless assessments being passed by the faceless assessment units. It's important for the CBD to rein in on them and bring accountability in respect of reckless and high pitched orders, and provide cost to the taxpayers and try to recover it from these reckless officers. And lastly, from the administrative side, the faithless appeal is hardly functional now. This has given rise to a situation where the pendency in the tribunals come down significantly, which is only an artificial development, because a lot of appeals for the past few years are held up at the CET appeals level. So something has to be very seriously done here, because this would again block the collection of legitimate revenue so far as income tax department is concerned, and so far as assessors are concerned. The most important first appeal is stuck. So with this, I would end my budget wish list. I would thank Taxsutra and all the viewers, and all the best to you. Thank you very much.